Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Hello everyone, my name is Manpreet and welcome to Cut to the Chase. Now it's been a tumultuous week, and while the S&P 500 and Asia Japan equities might only be down between about 1.5% to 2.5% over the full week, we still saw a number of daily moves exceeding 3%, which as we know is unusually large. Now is this week likely to be any calmer? The answer as always is likely to sit in the data. The first thing we'll be watching this week is inflation. Later this week, the US releases both consumer and producer inflation data, and the big question facing markets is whether last month indeed marked the peak in inflation. Now, consensus is looking for a US CPI inflation number of 8.1%, which, while still high, is down from the 8.5% peak last month. But there is likely, of course, an equal scrutiny on the details, as well as any signal from producer prices. Now, what will also be of interest is any signal from Fed policymakers, given their embargo on public comments ahead of the previous policy meeting is now over. Last week, Fed Chair Powell's ruling out of a 75 basis point rate hike brought at least a day's relief to equities and bonds, but that has thus far proved short-lived given markets appear unconvinced that the Fed will successfully achieve a soft landing. All of this, of course, follows the release of Friday's US labor market data, which showed that while new hiring remained robust, wage growth, of course, remained a source of a concern at a point when markets are, of course, laser focused on inflation. Now, that's in the US, of course, but this week China is also set to release quite a bit of key economic data. Today, new loans and money supply data set for release, and recall this is important because of how it offers greater insight into credit growth, given this is where we're seeing some improvement, albeit in a data point that does impact growth and markets positively with a lag of a few months. Now, late in the week, China is also set to release its own consumer and producer price inflation data. CPI inflation is likely to be less of a concern than elsewhere in the world, given consensus is only looking for a 1.5% year-on-year inflation number for April, but producer prices are likely to be watched much more closely for any signs of a spillover from zero-COVID policies and their impact on supply chains. Finally, over in Europe, the debate over restrictions on buying Russian oil continue without conclusion. Thus far, the EU proposal calls for the European Union to stop buying Russian crude oil 6 months after adoption of the measures, and to stop buying Russian refined oil products by year end, albeit with exceptions for some countries which have been offered more time to adjust. Now, the proposal currently remains blocked, most so by Hungary, which said it would need up to 5 years to move away from Russian oil dependency. Nevertheless, oil prices continue to grind higher, with WTI at about $109 this morning, and we continue to expect this gradual move higher to extend as restrictions on Russian supply continue to tighten, arguably a positive outcome for energy sector equities, which, as we've noted several times last week, continues to be a favored sector. So quite a bit to watch this week, but a big focus on inflation in the US, in China, but also in several other markets across Asia as well. So that's what we'll be keeping a close watch on. And the big question, of course, for markets likely to be whether we have or are approaching the peak. As always, if you enjoyed this podcast, please don't forget to rate and like it. Thanks for listening. Wish you a happy trading day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.